Most people think that you need to stick with what you know, and that's true to an extent. But this is how you miss out on big wins. I'm a real estate investor, and I've been doing it for 30 years, and I'm buying into a market that no one is talking about. And today, I'll show you why this weird little niche might be the smartest investment of the next decade. See, I'm not ditching real estate, but I know a cash cow when I see one. And I believe that I can see it because of the years I've spent underwriting multiple asset classes and finding deals and operating deals. And honestly, I might regret making this video because the opportunity is still completely wide open. So what's this weird little niche? Well, it's regenerative health clinics. You've heard and seen a lot in the news lately with Mega and Maha and everything that RFK is bringing out about the big pharma and what it is and isn't really doing for healthcare in America. And that's really where I began to pay attention. And before you click off because it sounds boring, you might miss out on this golden opportunity because regenerative health isn't just medical, it's performance optimization, it's hormone therapy, it's peptides, it's hyperbaric chambers, it's all cash and all high margins, but there's a weird niche that's being added to it that is bringing medical insurance into play that is making it accessible to everyone. And that's why demand is exploding because aging, high net worth individuals don't want to age. Hardworking people are starting to see where burnout comes from not taking care of themselves. Heck, I even experienced the same thing in my life as I got to 50 and I started to see that those extra 2 or 3 pounds I'd been packing on every year had begun to multiply. And I was now overweight and out of energy and I needed to change something. See, regenerative medicine isn't really that weebie-jeebie. It's not about crystals and things like that. It's about taking care of your body. It's about understanding what you need to run at your optimal level. You can tune into guys like Tony Robbins and Ryan Panetta and Grant Cardone, and you can see how they are starting to prioritize their health in their everyday life and why not just grinding until you fall over is the way to go, but actually truly taking care of your health and figuring out what you need to make your body run at its absolute optimum. Guys like Gary Brecka are hitting the scenes right now. They're bringing tons of information about what you can really do to optimize that health and how you can function better. And when you do function better, everything in your life is easier to do and you're able to get better results. So when I'm looking at this business, I really see that it has a lot of the same similarities. It depends on demographic. It depends on location. It depends on performance. It depends on advertising. It depends on all the traditional things that I would use for real estate growth, but I'm seeing how it's becoming more and more mainstream and people are using it. In fact, there's a group of guys I meet with on a regular basis. Once a month, there's 7 of us that get together for about 4 hours, and we really dig into everybody's lives, how their business is going, and what they can be doing to optimize what they are doing. And one of the things that I saw is that 4 out of the 7 of us are involved in a regenerative medicine program of one kind or another, and we're seeing results that are allowing us to do more and feel better doing it. And so I really began to explore that, not only with my own health transformation, where I've lost 40 pounds in the last year and a half, but I also feel better, need less sleep, and I feel that I function at a higher and more attentive level. And that's really when it began to catch my attention. So as I see that real estate can provide massive appreciation, I know that regenerative medicine is providing huge cash flow, and it provides an opportunity to build a brand. And when you're building a brand, just like apartments, you're building scalability and you're building something that is a machine, and that machine will operate whether it's you pulling the levers or private equity, which is our ultimate goal in sale. With rising interest rates and investor caution, I think that this niche is still under the radar because it's a little bit outside of everybody's norm where they're completely focused on the actual sticks and stones and they're not focusing on the business itself. We've heard a lot lately from people like Cody Sanchez, who are all about buying and selling businesses. And this is another factor in why I decided to explore this option and dig deeper into it. Because you see, when Cody's talking about all of the businesses that are coming for sale, she's talking about an aging population. And that aging population is getting involved in regenerative medicine, not just because they've reached a point in their life where they're making more money than they ever have in history, but they're also feeling older than they ever have in their life. I know I feel that every single day. And so I think that this is a great opportunity that's staring us in the face. But these aren't just clinics. They're a vertically integrated business with a real estate play underneath. There's cash flow up front, there's reoccurring service, and there's a long-term tenant, the patients that are paying for the property. And all of those things are exactly the things that I look for in a great real estate deal. So here's how we're structuring it. And here's what makes the economics on it so strong. When we look at these regenerative clinics, the need for clients is pretty low. When you think about it, a good regenerative clinic has about 300 to 400 clients compared to a traditional doctor's office or a primary health provider that's looking at almost 1,000. And you're looking at something that is a high margin, very low barrier for entry because everybody can use it. Everybody wants to feel better. So my clientele isn't those with the sniffs and the sneezes or a broken limb or something like that. My clientele is literally anybody that is wanting to feel better, lose weight, optimize their health and performance for a very low cost, especially if insurance is going to step in and help with all of this. So when I look at the returns that I traditionally get from multifamily or industrial, they are based on paying off the loan, creating equity through raising the rents, and optimizing the cash flow in between. This is different, but it's extremely similar. So where we're building these clinics out, we're advertising through Facebook Marketplace, through TikTok, through all of those things that are bringing clients in. They're trying out the service. They're obviously feeling better, and they're beginning to tell their friends and family. But when I'm looking at my clinic numbers where I only need 300 to 400 patients, it's a very low bar. And that part is pretty exciting. When I look at how these clinics pay, there is a delay in payment because the insurance can be involved. If it's a cash pay, it's obviously very quick. But the thing is, when I'm looking at a 30 to 40% margin on the products and services that we're selling, the cash flow is obviously much stronger. Here's another kicker. You guys know me by now, and you know that I love to look at cash flow, but I also love to look at the tax benefits that a project can bring us. When I look at these projects and I look at these clinics, we are going to create massive tax benefits because we're going to be buying franchises that can be depreciated. We're going to be buying couches and tables and examination benches and all those things that go into a clinic that are going to provide upfront depreciation. On top of that, as we continue to push our profits into growing more and more clinics, we're going to continue that cycle of accumulating depreciation, which is going to be crucial for our exit. Because what we don't want to do is make a boatload of money and do what everybody else does and pay the government their big fat share. So we're building the model once, we're partnering with operators that actually take care of everything that needs to happen in the clinic, and then we're replicating it. 4 and 5 and 6 units per market. That's going to make it super simple because a lot of times when you have somebody call out sick and you've got multiple clinics in an area, so you can have people float around and cover, not like you do with multifamily where you have a set leasing agent, you have a community manager, and you've got a maintenance guy. If they're out sick, you just don't get things done that day. And because it's a fragmented space and there's not a lot of people in it, this is where the real opportunity to lead and to become an innovative brand in the space really shines. And I believe that it will allow us to have a 15 to 20-fold return in a very, very short period of time. So here's what scale looks like. Scale looks like building out clinics, making them profitable in about 8 months, and then using those profits to build other clinics. By reinvesting that capital, we're going to continue the model of expanding to be able to bring on 50 to 70 clinics in a very short 4-year period of time. And by doing this, we will be in a place where we have attracted the attention of private equity and VC capital. By doing that, we're going to have buyers that are willing to pay for a model that works. So this is where I believe healthcare meets investing. And for the right investor, it's a real wealth multiplier. If you want to see the deals I'm doing or talk about getting involved, hit the subscribe and book a call. There's links below. There's a smart way to reduce your yearly taxes. If you want to see how I did the same thing by buying 4 planes for 1.2 million, watch the video on the next screen right here.